It's a proprietary study that William O'Neill did over decades, right? And he successfully conceptualized the entire concept of blending fundamentals and technicals together. So I think the entire functionality of CANSLIM, the acronym itself, has attributes for each alphabet. So if I say C, it's current earnings. A is annualized earnings. So the CA part, right, I think takes care in the earnings perspective of how companies deliver earnings over a period of time. The N part obviously is the new products or new initiatives that a company takes. Because what we'll observe over a period of time is that if there are disruptions that a company does in the market, either through product innovation or he brings something to the table which his peers or groups do not have, that creates a huge value disruptor, either from a top line or an earnings perspective as well. So the N factor also becomes very, very critical. The L factor obviously is very, very important as well, because here we distinguish between leaders and laggards. So we are not a value investor, as simple as that. I think we are growth investors, which possibly mean that we do not invest at 52-week lows or wait for stocks to probably bottom out. We probably look at stocks which are near the 52-week highs. So it's as simple as that. And our logic here is very simple. I think the stocks are doing something right. So they're doing something right from an earnings perspective, they're doing something right from an innovation perspective, and that is what is probably helping them post those kind of numbers and exhibit the leadership traits that stocks probably should have. So I think there's a clear distinction between leaders and laggards. The I part obviously takes care in terms of the institution holding. So I think how the institutions are placed in this stock are very, very critical. So I think retail participation generally I think is very, very timid compared to what the institutions will do. So I think institution holdings also become very, very important, and the supply-demand dynamics. So I think how the supply and demand is coming through from a volume perspective and the market direction. So we've clearly created 4 quadrants in our market direction. There is an upward trending market, there is a market under pressure, there is a downward bias, markets which will rally back again. So I think how we place ourselves in that quadrant and how it performs on a trailing 26 weeks, a trailing 4-week basis, clearly defines the sectors which can do well and the market direction as well. So if you blend these two things and all these things together, I think you've got a brilliant combination in terms of the right fundamentals of a stock being present and the right chart formation of a proper base, which means that you can basically buy the stock at a right price.